Hi believers, this is Nishant from Team Waya. The year 2023 has been amazing for the investors. Since the last 9 months, the Indian markets have risen vertically with no major corrections. The Nifty closed the year with a 20% return, Bank Nifty with 12% return, the mid cap with 46%, and the small cap with a 55% return. As an investor, we all have same question. Will the market continue to give similar returns? Let's take a look at the yearly chart of Nifty. Since 2014, every year Nifty has given a positive return, except 2015 in which it lost 4%. The average annual return since 2014 is 13%. Looking at the India's prospects and the global positioning in terms of GDP growth, we anticipate that Indian markets will continue the trend. And we believe in the long run, Nifty will achieve a 36,000 mark. Let's discuss some of the data points supporting Nifty reaching 36,000 in the next 3-4 years. India, the structural story. In the last 10 years, India's GDP increased at 6.2% CAGR. During the past 10 years, the Nifty has given a return of 13%. This is the average return. Do note that GDP grew by 6.2% and Nifty gave a return of 13%. That is 2x of GDP growth. The empirical data suggests that by 2027, India's economy will be worth $5 trillion dollars if India grows by 7 to 8% annually. And at that time, the Nifty will be at 36,000. But how will India achieve this growth? Let me give you a gist of what is happening on the ground, which is supporting the expected growth rate. Healthy demand outlook across domestic sectors and capex data supporting the growth outlook. The capital expenditure as a percentage of GDP is at all-time high, which means the government and businesses are spending money for expansion. Big capex announcement in railways and roads holds the key for making India a manufacturing hub. Renewable energy sector is expected to have a capex of 19 lakh crore in the next 5 years. Indigenization of defense sector, which means the government wants Indian companies to manufacture and supply defense equipments rather than importing. The government schemes for electronic manufacturing services. Electronics and defense are among India's top 5 imports, which is very important to reduce. Lastly, Nifty's EPS has grown by more than 30% in the first half of FY24. The expected EPS for the Nifty for the coming year is 16%. Let's go through the charts of some sectors which can be the theme for the coming years. Starting with the infrastructure, the index is trading at the all-time high, breaking the top it made in January 2008. The sector is experiencing a very strong order book and demand. The infrastructure stocks will continue to remain in focus in the year 2024 as well. Capital goods index. The rally is vertical. This proves the strong demand and order book for capital good companies which are beneficiary of the entire capital expenditures. PSU Bank Index. The index is trading at the life high. Government's measure to clean banks' balance sheet during the year 2017 to 2019 led to lower NPAs, rising advances, lower provisions and higher return matrix. PSU banks like Canara Bank, SBI, Bank of Baroda and PNB among others are still not expensively valued. Moving to the power index, the index is trading at all-time high. The story for power companies is well set for the next couple of years because of the big announcement in power generation, transmission and distribution capital expenditure. Other sectors which are also expected to perform are auto and real estate because this sector will be beneficiary of domestic demand and consumption which will also rise with the GDP growth, leading to demand for premium products. Also keep an eye on themes like railway, roads and defense because the government is taking big steps to build rail and road connectivity and reduce import dependence on defense. Concluding our analysis, the major indices are trading at life high. Although the Nifty target is 36,000 by 2027, but for 2024 we can expect 13 to 15% return, which is close to the average return of last 10 years. For next couple of months, large caps is possibly a pack to invest and trade. Also keep an eye on sectors like IT, PSU banks and chemicals. 2024 being an election year, do expect some volatility. Also note that Nifty has given at least 11% return in the election year since 2004. The earnings season will kick off in January. The direction of the stocks will follow the growth and outlook of earnings. Although there is no sign of pessimism, the market experiences periodic corrections every year. So it is critical to remain invested and keep evaluating risk with the opportunities. We continue to evaluate opportunity and provide the best possible research to Waya believers. For 2024, we wish you a happy and a profitable new year. Thank you.